Hello friends, good week. How are you? Vladimir here, and this is a weekly review. And this week is going to be very special, and the review is going to include many things. Well, first of all, as I predicted on the previous week, during this week, the last week we have had, we will see some kind of rangy moves, boring moves. Nothing too clear was expected. And actually the last week, maybe just except Friday, was kind of boring most of its time. The biggest question now, what should we expect for the upcoming week and the next weeks? And I want to remind you, we are in front of a summer. Many traders are going for vacations, but I still think something very interesting, very significant is going to happen on the next months coming. The first pair I would like to start with is the yen pairs, and the first one will be the euro yen. I was talking about the neckline level here, as you can see, right, of this head and shoulders many times. As long as it holds, we can expect a bearish move, but so far it seems like it is broken, and this break should take the euro yen a bit higher. Watching on a weekly chart, we can see that the first divergence here of the regular type did the first move to 20 EMA a bit lower and retracing up. This retrace up, which I expect to take it again in somewhere in between 134 up to 138. By the way, this is the euro yen weekly chart. Okay, I'm talking now about the euro yen pair. I expect it to rise into these levels. I do think this pair is building something that will look like a wedge. We have 1, 2, 3, 4 spots already. We now most likely are going for 5. 5 should be in between these levels. On this point, I will expect something like to 6, another push to the upside, and a breakdown. The next breakdown, whenever it comes, will be aggressive, much more aggressive, and it will take us back to the first two spots in between, inside this wedge. This is my expectation for the long run. For the short run, as I said, it broke the neckline around 130.50, 130.80. As long as it holds this level, I am very bullish in my views, and I would say even buy the valleys. Every valley we will get closer to this level should be an opportunity to buy. All my bullish scenario is relevant as long as this neckline now holds. If it will be broken to the downside again, this might be a warning sign that the bulls are not there after all, and this wedge might be not relevant, as if it does not hold, it's going to be simple double top, and double top that will start the down move immediately during the next weeks, and then we will see something like that being duplicated, taking us pretty much to the same level as the first scenario should do. So to make long story short, as long as we are holding above 130.50, 130.80, which is very important level based on the broken head and shoulders now, now is behaving as a very stiff support. As long as it holds, I keep my bullish opinion, and I think 134 up to 138 are very potential levels. If the 130.50, 130.80 will be broken to the downside again, it will close below. That would be a warning sign that after all, it might be only double top, retracing and taking us back to the downside during the next few months, during August, September, and October. Watching on a monthly chart, my scenario, as you might remember, that we are going after a pullback here, right? We are going to the upside to the next resistance zone, which is right here, and maybe even to Bollinger Band duplication, right, with the break, something like that at the end. That could be even 140 or something, even above 140. So in other words, I'm still holding bullish opinion for the long run, and all this relevant as long as we are holding above the support I have mentioned. How this should affect on the other pairs, pound yen also should continue to the upside if it actually, there was also the head and shoulders, if you remember, right here, right? Right now it tries to break it up. It should hold above. Right now it creates a convergence for the first time. Buy pullbacks as long as this level holds. For pound yen, I would be even bit more careful, and I would say 152. This is the final level I wanted to hold. As long as 152 holds, I keep my bullish expectation that it might go all the way to 156 up to 161, 163 zone, doing pretty much what the euro yen does sorry, yet, and move inside. In this case, it will not be a wedge. In this case, it will be more like a channel with 1, 2, 3, 4, most likely 5, then 6, retrace, 7 to the downside, taking us back to this trend line. So these scenarios right now, after several weeks ranging inside the same zone, it looks like it starts to be very interesting period. And from one side, yes, we are coming to summer, but right from the other side, take a look on the chart. They say that something very interesting is about to come on the next weeks and the next few months. Alright, so this is my opinion about the yen crosses. I don't have any clear opinion about the dollar yen, which I still think can go higher, also to double top or even higher according to the monthly chart. Push it last push to 105 up to 110, something like that, and then start much deeper correction to the downside. But again, I don't have nothing clear about the dollar yen yet, and I would be even careful with this potential double top and a down move of dollar yen. And if it does in this case, it should also take the yen crosses to the downside with that. So it's very better from my point of view to stay with the kind of clear pairs like the euro yen and the pound yen, which look together much better. Majors, euro dollar, from my point of view, watching and on a bigger scale, it looks like we are moving inside of this megaphone right now with 1, 2, 3, 4, 5 spots right now, and it looks like it is making the 6th spot right here. If we compare this up move to the current up move, it looks pretty much the same. We got up move, we got several small stop right here for 2-3 days, and then push up again. Here we have also, right after the end of the up move, 2-3 days. On the bigger view, it looks like a triangle. If I have to measure a percentage, I think it's kind of 60-40 to the upside break, but it's very fundamental based here, because as we know, Draghi cannot allow the euro dollar to be too strong, and that's why I prepared here also a range to be ready for both scenarios. 130.70, 130.50, this is the break should happen in order for the euro dollar to go to the downside, and RSI should cross the 50 to the downside to gain the bearish momentum. Then with protection above the last highs, it should be nice move all the way to the lower side of the megaphone here. If it makes a break up, let's say I will not be surprised if we will see that being duplicated. In this case, Draghi can wake up screaming and then the Euro Central Bank can intervene aggressively into the market and just devalue the euro dollar with all the tools they have. As I said, 60-40 percentage from my point of view, we are going to the upside. We might still play 1, 2, 3 days here and then bam, and that's why I have clear levels here. This is the euro dollar daily chart, what I'm talking about right now, of course. This is my view about the pair, and that's how I will look to trade this pair. What about the pound dollar then? Pound dollar does not have any any bearish signs yet, especially not after breaking successfully above this broken trend line again. It looks like holding there bravely. I think pound dollar is able to make a rise as well. Take a look on this chart. This is the 4-hour chart. A divergence after a small move normally does not make significant moves against. That's what I would expect, and I could expect drop down inside this range and between 150 140 down to 150 50 and from here I would be personally looking for buy opportunities, as from my point of view the pound dollar is able to continue higher from here, especially watching on the weekly chart. I remind you that was a double top. Normally such double tops are being broken to the downside. I do expect it to rise a bit higher, closer to 154 before it retraces all the way down. What will make me think that the pound dollar is regaining its bearish momentum again? A break below this range, a break below this zone of fight we have had during the last period. So this is my view about the pound dollar. I would buy pullbacks in here in this zone, as I showed you on the 4-hour chart. I could expect 154 to be reached, or at least 153.30 to be reached after that. There was a head and shoulders broken on the pound dollar as well, as you can see, right? Shoulder, head, shoulder, inverted pattern on the 4-hour chart. Now breaking up, might go for a pullback and for a test. I would expect a rise from there. Only break below 150.50 and could change the view in my analysis and take the pound dollar strong to the downside again. And I remind you, Carney said not once that that's what they want, not directly, okay, but that was the clear hint from his mouth, his words, that they want to devalue the pound and they will do all they can to help the economy. It means print much more money as it looks. Again, as I said, it feels to me like it still has more to go, something like 154, maybe a bit higher. Then we can start to look for sell opportunities once again on the pound dollar. And how do I see the crossing between the euro and the pound? Well, you remember my expectation of this pattern break. It did complete the break to the upside. It did fail to break above the gap zone, as I warned about several times during the last weeks. Now we got a pullback, and now this level is being retested. I'm talking about 085.80 up to 086. This zone is being retested. If during the next days it does not manage to break it down and creates within 2-3 more days some reversal pattern on the upside following a bullish divergence, bullish hidden divergence on the daily chart, that could be a bullish call that the euro pound after all will rise to the upside. And watching on the monthly chart, as I've been talking about that several times in the past, it looks like, let's erase this text, it looks like we are able to see a break here, retest, and fly again. This is for long run, but, and here is a big but, this resistance that failed to break several times must break it in order to gain a momentum. If not, we have 1, 2, 3, 4, 5, 6, right now 7. That's why I think 7 should break to the upside. If not, we are going to see another push to the downside, and that could be deep. And I remind you, watching on the monthly chart, that there is still trend line never being retested, and that could be classical move to the downside again, if and only if this zone does not break to the upside, as I said. Watching on a weekly chart, there is a bearish pressure. I remind you, it looks like kind of a double top, sorry, with 5 waves, 1, flat 2, 3, 4, now 5. Did not reach the last highs, but it still looks like a double top. Sorry, I confused again, and that what could help the pair to drop. I would be trading it this way. There is a trend line right here. A break below this trend line can actually open the doors for serious bears to come, and this is a long weekly chart, of course, as you can see, right? Long weekly trend line here, right here, okay, through the bottoms, break below that right here, right? This is the zone, and it's a pretty great bearish call that we are moving all the way down to 200 moving average, and then most likely even lower. As I said, if it holds the current level here, that could be a pretty impressive bullish call for longer run, following the monthly flag to the upside with a 7-spot break. If it will be broken to the downside and the trend line will be broken, that's a bearish call, and then according to the monthly chart, we will see another push to the downside following this long trend line. So stay tuned. The euro yen, it does look promising, it does look good, technically based, and I think it's very important to follow this pair. Opportunities are about to come there. Great, so these are the main things I have on the list. Now I do want to go over some updates about the trades we've been talking about several weeks. Euro Australian and Pound Australian, actually, let me just erase the lines. Euro Aussie is still fighting very important resistance, and Euro Aussie is on a weekly chart showing some extreme. As I said not once, the cycle will come. It's only a question of when, not if. It's still able to come right from here down to 136, the weekly 20 MA, then push it up again. And for that, that's my analysis. This is the daily chart. We have had a false break right here, following by the divergence. Right now, it created a low on the 20 MA on the support. That's around 140, 150. Then we can see a push to the upside, a big push to the upside. That was 3 soldiers here, and that's why I expect the pair to drop down if we successfully breaks the previous low right here. It's actually like 1, 2, 3 break, and then I would expect it, as I said, to go first of all to the last support, moving inside this flag, and then it might most likely break the support, taking us to 136, and then I would expect long-term buy from starting from 136 approximately. It is still confusing pattern, as it might be a wedge, it might be a triangle still, it might be just a channel. It's very early to point it up. In case we break above the last high again, the Euro Aussie, I expected then to make after this break, make another push up that could be to 148, 150, to this zone, following the divergence, make it even more longer, and then I will expect something like 1,000, between 1,000 up to 2,000 points correction, not correction actually, cycle. Okay, so I think these moves, either up or down, will be decided by the market on this week, on the upcoming week. I think during this week we will get the next direction for this pair. And of course the same view I have about the pound Aussie, which from my point of view is moving kind of inside the channel. We have 1, 2, double 2, 3, now 4, might be double 4. From here I would expect another drop down. I still think that 159 zone approximately is reachable, and it should be reached, it should be taken. So in my point of view, the current weekly extreme, the current weekly scenario should take it to the downside. If it breaks to the upside again, it will most likely take us to the next very important zone, 170 up to 175 on the weekly chart, and then of course following the weekly continuing divergence to be formed with weekly Bollinger Band duplication, we would expect much deeper correction again between 1,000 down to up to 2,000 points correction to the downside. So we are following very closely these levels. As long as it's inside this pattern, it's good idea to sell the tops with divergences, of course, 4-hour chart divergence, 1-hour chart divergence with daily confirmation. If it breaks and holds on the upside, that's a pretty impressive call that we are ready to go higher a bit again before the next crash or much deeper cycle, actually not crash, much deeper cycle comes into this pair. Again, from my point of view, it's going to be decided this week, up or down. If it's up, then I think it can last all August, maybe even September, and then during September, closer to October, start to build the final reversal zone, and then reverse for very deep cycle. So this is my opinion. Again, I keep my bearish view mainly because this is wonderful pair for long run. The Australian pairs, actually, they are wonderful pairs for the long run as they pay swap. So except in joining the cycle that will come later on, much bigger move, or right from here, no one can actually say that as long as we are inside patterns, except in joining the cycle. At the end of the day, we also gain swap. Swap means another extra percentage profit, which is very important. And another Australian pair I've been following for a few weeks, Aussie Kiwi. I remind you, we have weekly harmonical pattern. The bottom can be right here, the bottom can be 114, maybe a bit lower. My opinion did not change about this pair. We're coming to extreme on the weekly, and when the weekly will reach the extreme with the weekly candle pattern and a daily recreate its divergence as well, it will be a perfect sign to jump in. That could be again right here, that could be 114, that could be 113. Each of these levels are acceptable, as you can see, 114, 113, and so only question of time before we will get a deep cycle. At the beginning I would expect between 300 to 600, then another push down, and then for longer run I would expect a cycle for over 1,000 points to the upside. It's long run, nothing to talk about it right now. I will talk about it on future again and again. To make just a quick summary, my main opportunities coming from the Euro Yen, Pound Yen, Euro Dollar, Pound Dollar, which are amazing opportunities in my point of view. Euro Pound as well, which I love very much. Dollar Canadian, as you remember my words, I've been following that to the upside as long as 104 holds. 104 right now is a problematic level. Right now it create some range around this level. I don't like it too much. That's why I prefer to stay away from dollar Canadian right now. I don't like such behavior from the pair. That's why I prefer, as I said, to stay away. Another great opportunity I have on my list was coming from pound against the Canadian. I think pound Canadian is about to reach, as you can see, it's fighting this zone right here. I think it's able to break it up and take us to the next resistance, closer to 159 or a bit higher, to this double spike zone right here. Okay, something like that. From here to create a bearish hidden divergence on a daily chart, and right from here between 20 MA on a daily chart, this is pound Canadian daily chart, and between the 20 MA up to 160 actually, here to create a divergence, bearish hidden divergence within several days, and then create another bearish cycle, and of course that's what I expect. Okay, combination between daily and 4-hour chart divergence. If we get a down move right from here, then simply follow this flag it creates right now on the 4-hour chart. This is the 4-hour chart. A break below the flag should open the doors for the fifth wave, and the fifth wave on the pound against the Canadian should take us down to the support and the spike zone around 155 or lower. As you can see, we have 1, 2, 3, 4. We might get a 5 right here. So if it breaks it down again below the 4-hour chart flag or channel, as we saw, and the daily 200 moving average, this is a pretty impressive bearish call that we are going all the way to 155 or even lower. Very interesting opportunity on pound Canadian in my point of view. I want also to just a quick note about the dollar ZAR and dollar Turkish, which also are very bearish pair in my point of view for long run. I remind you, monthly chart has over 20 candles right, so every new high we have on monthly and weekly chart combination, like 1040, 1060, 1080 on dollar ZAR, are just next levels to have more sells. This pair pays amazing swap, and it's great to be inside. I think it's only a question of time until it gains the bearish momentum. As long as it plays around the top, just a great time to hold. During the long term, such swap, friends, can give you extra 5, extra 10, depends on your trade, of course, percent per long term. How can we refuse that? Okay? It can pay very, very well for the long run, and this is why I think dollar ZAR and also dollar Turkish, which is dancing around its top, are really, really great opportunities. They both pay amazing swap. Take a look on this bearish divergence forming on a monthly chart, dollar Turkish. Okay, that's why I'm convinced that within several months, maybe even a bit longer, we will see dollar Turkish starting its long-term down move. And except huge cycle, I expect we can gain extra percentage, big extra percentage, thanks to the swap. So, by the way, I've been asked about the swap thing many times. I prefer, normally, for those of you who are afraid of paying swap, have 2 accounts. One Islamic account, there are brokers that allow to do that. One Islamic account which you just don't pay swap, and one where you can gain swap. Okay, so this way you, from one side, don't pay, just gain, and from other side, you're protected on the other broker that you don't gain but also don't pay based on the Islamic account. So just consider that. That's a great solution for investors, of course. Gold and silver, I don't have much to update. You know my opinion. I think we're already in great place to, for investment, to hold the investment. I think gold can fly any moment. On the same breath, it can first of all reach again 1150 or even 1000 zone. it doesn't matter. It doesn't change the my view. We have a monthly bearish, monthly bullish hidden divergence, weekly 20 candles right with continuing divergence. It doesn't matter if it creates new low, because from my point of view, gold is in a place that every new low is just an opportunity to buy and have more. Same about silver. I think it's only question of time until they both get crazy and fly up again. I don't see any other solution. This, from my point of view, this setup it's forming on a monthly and weekly chart for long run is very, very, very rare. That's how I see these things. And what about indices? Well, in my point of view, and you know my point of view, I said it not once, something is about to begin right from the coming week during the next 2-3 months. I said it not once that this weekly divergence actually followed by monthly divergence, bringing the US indices to something bad. Unfortunately. Now, it might be too early, it might not happen yet, but we have 20 candles right. Small pull back to the 20. Now up again to new highs. Following the next divergence. RSI playing around the top. It all looks familiar. Last time such things happened was here in 2010-2011. 20 candles right, down to 20 MA, up again to next high, same divergence, same RSI on the top, same stochastic divergence. That's what we got. Before that, we got 20 candles right, down to 20 MA, up again, same divergence, same top on the RSI. That's what we got. In my point of view, the third cycle, right here, will be the deepest one. For long run, of course, not for sure. And as I said, something might start this week and followed actually through the next month. August, September, October are critical months. And again, I hate to sound type of pessimistic or I don't know bear. I hate it actually. I don't want just to spread bad things. But remember, Detroit lately bankrupted. So something is happening again and again behind the US numbers, behind the US news. China is slowing down. Friends, charts are saying everything, okay? Something is about to happen here. You can see that. And a monthly chart is closer and closer to extreme. This is terrible because that's what happened after it was on extreme on 2007, 2008. Okay, I don't claim we will see such deep thing, but it doesn't look good. Okay, so why I say that? Not because I want you to be bears, just I want you to be protected. That's all. And I repeat it once. I don't care to be the one that is wrong right now. I just say that just to be safe. Okay, so you know how to protect yourself. When I said something bad is going to happen, for my colleagues, I wasn't public on this period. On 2006, 2007, they were laughing. Right? They didn't believe it. But on 2008, everyone started to ask about my opinion. What's next? Now I don't look to be you know the right guy here. Okay, I don't want to be genius saying that. No, there are a lot of Dr. Dooms and all the famous bears there. I'm not looking to be like that. I just want you to be prepared for a possibility. The weekly divergence and monthly combination will make a stop. Okay? And when it does a stop, I just show you in the chart how normally it looks. Okay? I remind you, there is a trend line never being tested here on the Dow Jones, for example. That's what we could expect. Over 2,000 points. Okay, so that's why I said be careful. Of course, in case you trade Okay, same about the S&P, same about the Nasdaq, which had difficulties already because of Microsoft mainly on the last week, and of course same about the Nikkei, which is creating kind of double top or maybe even new high with a monster divergence. That's what I'm talking about. Lately I've been talking about the oil as well. You know my opinion. On the last weeks I've talked about the break of the monthly triangle, if you remember my words here, and you should, right? That it should break it up and it should take us to next highs. I'm still bullish on oil. I still expect it to reach between 110 up to 112 or even 114. I would expect a cycle to the downside coming from there. That's what we have. That might be the Bollinger Band duplication zone. On the daily chart, we're forming a divergence. It's going to dance around the top. It might continue a bit more, and then bam, some deep cycle is about to come. Buy volleys until 110, 112, even 114. Buy volleys. It does look good. It does look correct still. All right, friends, that's my weekly review for this week. Now I don't show it here. I don't have this chart here, but remember, like a month ago or more, I've been talking about wheat and sugar, perfect opportunities for long run. I still keep my same opinion. Also, the coffee, of course. Again, this is something to buy and to hold for long run. I do find them amazing opportunities. Thank you very much for your time watching this video. I hope you are going to be prepared for this period, summer period. For those of you who are going to vacations or already in vacations, I wish you wonderful rest, wonderful holidays, you and your families, and I hope you enjoy that, gain some new forces, and come fresh to the next trading period on 2013. Once again, thank you very much for watching this video. I wish you a wonderful week. Yours, Vladimir Ribakov. By the way, your comments are always welcome on the blog, on Facebook, everywhere. So just help us to spread the weekly review in your cycles as well. Thank you. Yours, Vladimir Ribakov.